And that was just about the time that Goldman had indicated that it would start its own crypto trading desk.
Yeah.
So I'm wondering what the thought process is in terms of staying within a big firm, because it seems like more and more big firms are looking at this path. And so people at the firms might be thinking, oh, do I stay here to be in crypto, or do I go out on my own?
Yeah, I think there's been a lot of opportunity to start your own business and launch your own fund, or, like you said, you kind of saw an explosion of funds last year, and I think that's toned down a little with the pullback in the market. I think it's going to be a little longer before there's a lot of crypto positions available at a place like Goldman, right? That desk is kind of just starting. I don't think they're hiring hundreds of people. They're hiring a few select people for that. So I think you're still going to see entrepreneurs going into the space trying to take advantage of the opportunities.
Right. And seeing what crypto has done, experiencing it in a front row seat,
Yeah.
Chris, would you put your grandmother's money into the funds that you have?
Yeah,
10%.
Absolutely. And it's all
Really?
about sizing appropriately. So even if you're the most conservative investor out there, right, just because there's a lot of volatility, the actual risk-adjusted returns are quite good relative to other asset classes. So for my grandma, I might put in 0.5% of her portfolio. That's her downside, is 0.5%. But her upside, you might get 10x, over the next 5 years. And that would be a great diversifier for her portfolio in general, and a good investment overall. It's generally been uncorrelated, and that will probably continue for a little while. And that has huge diversification benefits in a broader portfolio, even if sized in a small way.
Do you have a grandma in crypto?
Anyways, I do agree with him that every portfolio should have a small amount, and I'm not worried about crypto going to zero. I mean, when a big company like Goldman Sachs and big investment bankers are getting into this space, they're here to profit on it. So there might be a lot of volatility, and there's probably going to be a lot of downs, and then there's going to be a lot of ups. And guess who makes money off of volatility? The bankers. They're the house. They're the casino. So once the casino gets in on this, they're not going to kill their cash cow. They're going to try to put as much volatility in this product as they can and make as much money as they can, because that's all that banks care about, especially banks like Goldman Sachs. But let me know your thoughts about this. I don't know, 0.5%. That's way too conservative in my opinion. But then again, I'm 30 years old, so I'm a little bit younger than a grandma. So I recommend 10%. But if you are conservative, maybe 5%, because he's so right. The kind of returns you can get is totally worth the risk. And like I said, go take 50%, 60% of your portfolio, go put it in a bond or something safe, in a money market, whatever you want. But you do want to have at least, in my opinion, 10% on highly volatile but good long-term outlook on some, whether it's crypto or maybe some technology stocks or whatever. But at the end of the day, stay diversified and dollar cost average, which I've probably told you guys a gazillion times. Anyways, let me know your thoughts, and I will talk to you soon.